In the U.S., residential foreclosure rates continue to inch upward, with more than 100,000 properties repossessed in September 2010 alone. More than two-thirds of commercial real estate undergo a rewriting process, and 16% of the 80 million homes currently financed carry exotic mortgages. Amherst Securities is one of the top companies in real estate finance, particularly mortgage-backed securities. With defaults continuing to cloud bank balance sheets, CEO Sean Dobson says the MBS market is perceived to be less risky than it actually is, a risk assessment that needs to change.
The methods for calculating risk reserves related to mortgages are fairly antiquated, and the issue is about timing. So in some markets, we think about the conditions change, we anticipate the behavior of the underlying instrument, and we adjust our expectations for outcome. In the mortgage space, because defaults have been so few and far between, it's thought of more of insurance. So even though home prices decayed so quickly and so far, the reserves for those loans were not changed. So now the banking system has a real credibility gap. So it's about sort of speeding up a little bit the recognition and getting the bank's regulatory capital calculation in line with what the market already knows is going to happen.
Talking about U.S. real estate and where that's been for the last couple of years, how has that affected how you do business at Amherst?
It's caused us to de-risk. You have quite a backlog of unresolved loans. You have single-family loans that far exceed the value of the real estate and are very unlikely to continue to perform if they still are performing. So we've recommended that people de-risk to focus on assets that don't have a high likelihood of going through the resolution process, since it's so difficult to anticipate.
With real estate making new headlines thanks to fraudulent foreclosures and talk of continued bailout for government-sponsored entities like Fannie Mae and Freddie Mac, Dobson's biggest concern for the MBS market moving into 2011 is replacing government financing, which accounts for 95% of single-family housing transactions, with other loan sources.
We think that the incidence of new defaults is dropping and becoming manageable. We think Freddie Mac and Fannie Mae, our forecast a year and a half ago, I think, was $450 billion in losses, and we think they're going to come in right around there. But we think that this issue of whose loss it is and what happened at the point of securitization will get quite a bit of focus and produce pressure on the banks, but not so much pressure on the economy.